peer-to-peer lending earn interest by lending money online? 2026. What if instead of keeping all your money in a traditional savings account, you could potentially lend money through a platform and earn interest from borrowers? That's the basic concept behind peer-to-peer lending, often called P2P lending. In this model, an online platform can connect investors or lenders with borrowers, depending on the laws and structure of the platform. Instead of a traditional bank being the only source of the loan, the platform facilitates lending between participants. It sounds like an easy passive income idea, but there is one extremely important word you need to remember: risk. The interest you receive is compensation for taking risk, and the borrower may fail to repay the money. Unlike a guaranteed bank deposit, P2P investments can potentially result in partial or complete loss of your invested capital depending on the product and applicable protections. That's why you should never look at the advertised interest rate alone. A platform might show an attractive potential return, but you need to understand borrower default risk, fees, liquidity, recovery procedures, taxation, platform risk, and the exact legal structure of the investment. One of the most important principles is diversification. Imagine lending your entire investment to one borrower. If that borrower stops paying, your entire investment could be affected. Some P2P platforms allow investors to spread money across multiple loans or borrowers, which may reduce concentration risk. But diversification does not eliminate the possibility of losses. You also need to understand that higher potential returns usually come with higher risk. If someone promises extremely high returns with almost no risk, that's a major warning sign. Always verify whether the platform is properly regulated or authorized in your country and whether the specific product you're investing in is covered by any investor protection or guarantee. In India, P2P lending platforms operate under a regulatory framework, but investors should still check the current RBI rules and the platform's latest disclosures before participating. Don't assume regulation means your investment is guaranteed. Another important issue is liquidity. If you lend money for a specific period, you may not be able to withdraw it instantly whenever you want. Depending on the platform and loan structure, you may have to wait for repayments or use whatever exit mechanism is actually available. So P2P lending should not normally be treated like emergency savings. Keep money you may need immediately in an appropriate liquid and lower risk place. Fees are another factor. Even if a borrower pays interest, the platform may charge fees or other costs that reduce your effective return. Taxes can also affect what you actually keep. The tax treatment depends on your country and the type of income, so check current official guidance or consult a qualified tax professional if necessary. AI can help you organize loan information, compare publicly available metrics, calculate scenarios, and build a tracking spreadsheet. But AI cannot predict which borrower will definitely repay. Never use an AI-generated recommendation as a substitute for understanding the actual investment. If you're considering P2P lending, start by learning the platform's business model and regulations. Read the risk disclosures carefully. Understand what happens if borrowers default. Check how collections and recoveries work. Understand fees and taxes. Diversify instead of concentrating your money in one loan. And most importantly, only invest money you can afford to have exposed to investment risk. P2P lending can potentially generate interest income, but it is not free money and it is not guaranteed passive income. The smarter approach is to treat it as a higher risk investment category that requires research, diversification, and realistic expectations. If you enjoyed this video, follow for more investing basics, passive income ideas, personal finance concepts, AI tools, online business strategies, and practical money education.